Hello everyone, I hope you guys are having a great day today. We gotta record, today we'll be doing check-in and liquidity part 2. Basically, that's what I have planned for Tuesday. Let me... Okay. There we go. I wrote in the check-in as I was saying yesterday. Anyway, yeah, let's just not waste any time. I don't want to sit here all day. Let's just go here.
Yep. What's good? Welcome to day, I believe, 9. Day 9 of the boot camp. Okay, and today it's a little psychology day. Okay, and you're probably like, okay, gotta get ready, get motivated, to get disciplined. This is just a check-in, okay? How are you guys doing? How has it been so far? Okay, I'm going to be literally scouring the comment section of this video to see what I can do better. Leave any questions that you guys have. Leave any, things that you guys might want to see going forward with the boot camp. But this is just a check-in, right? We just finished up our first week. We're going into our second week of this, and this is when it's going to get hard. This is when that motivation is going to die down. And trust me, I'm not slowing down for you guys. I'm definitely not just going to give up and stop posting these videos because I'm very determined to have literally the most successful day trading community in the space. And I think we can do it 1,000% by doing this because, again, nobody has done this.
Killing me. I don't know
people
what's wrong.
like the shit that we're doing in here is literally groundbreaking in terms of like day trading shit. Like, not to toot my own horn, but like we're creating a fucking army of people that are actually going to be very successful traders that can stay out of this whole thing. And that's my goal with this. Okay, so today, literally just check in. How are you guys doing? Take a day off. I'm not going to assign any homework. Okay, I know it's easy to get burnt out doing a lot of work every single day, day in and day out, but if you guys really want this, if you guys are disciplined enough, shit will pay off in the end. Okay, I think we're gonna do like a check-in like once every other week, okay, as we go on, and you're probably like, holy shit, how long is this dude planning to do it? A while, bro. We're probably gonna be doing 2 months straight of just uploads, bro. That's kind of the time frame that I have in mind. But yeah, man, let me know what you guys have thought about the bootcamp so far. I know we haven't gone too in depth with some of the trading stuff. We just started talking about liquidity. You guys will have another liquidity video tomorrow, going over how to spot it in the market, and then after the day after that's like a psychology video. We'll talk about how to kind of execute off of liquidity and how to actually see the momentum shift and how to actually confirm that the liquidity was valid that you spotted. But yeah, I do want to kind of take this slow. I don't want to just be like, boom, here's all this fucking information. Like, you guys are fucked. Like, try and learn this in a day. I do want to take this slow. And that's how this shit should be, right? It's like if you've ever studied for like a crazy finals test, right? You don't want to just cram it all in one day. You want to take it slow, one day at a time. Make sure you actually understand each concept, and that's what I want to do with this. Okay, we're putting multiple parts to the whole liquidity thing because it's the most valuable and the most essential thing within the strategy. And understanding liquidity sweeps is probably one of the biggest things in terms of the way that I trade. So I really want to make sure you guys understand that. So that being said, yeah, bro, just leave me a comment. Tell me what I can do better. I'll be checking on them. I'll be replying to you guys. I really do appreciate the support that we've had throughout the past couple days, throughout the past week on this thing. We're getting some serious views on this boot camp, and I'm not really here for views as long as I can get at least like 100 people out of the couple thousand that are doing this boot camp with me and turn them profitable. That is an insane success rate in my eyes. And if anything, I encourage you guys to make that number higher. Okay, I said 100 people out of like 20,000, right? We're getting pretty much like 20,000 views per bootcamp video after like 3 days of them being posted. So that's kind of what I'm assuming, the amount of people that are participating in this. And I love every single one of you guys, but take that shit to heart. I'm pretty much saying like, yo, I really don't think all you guys will make it. I really only think 100 or maybe.
Yeah, vi kan innan de också.
200 people will come out of this profitable, and even after the 2 months, you won't be profitable. You definitely won't be profitable. But it's the time that you put in after this. It's what you do with this knowledge. It's what you do after these 2 months that will turn you profitable. Okay, so let me know what you guys want to see going forward with the boot camp. Let me know how it's been so far. Let me know what I could improve on. I am getting a setup boost. Okay, I know the face cam's ass. I did buy a face cam, but unfortunately, it does not connect to my MacBook, but it's fine because I have a PC coming. It should be here June 14th. Okay, so it's still gonna be like a couple weeks with a shitty setup, shitty cam, but things are starting to ship in. I get like my desk. I'm getting more monitors. I'm turning into like a trading guru. I'm gonna have like the full fucking trading setup. It's gonna be funny, but yeah, man, that's pretty much all. Let me know how you guys have been liking it so far. I really appreciate all you guys for tuning in, watching this. Giving me the opportunity to teach you guys and putting your trust and faith in.
Sorry, I have a cat and she's kind of weird.
Me, and I'm not going to let you guys down. Okay, so with that being said, today you got no homework. Okay, I kind of like imagine myself as like the teacher being like, no homework, and everyone's like, hey. So no homework today. Just have it burnt out. It's really really easy to overanalyze and get.
Whatever.
Yo, what's good? Welcome to boot camp day fucking 10, I think, right? Yeah, I think day 10. So you guys know that last day that we talked about trading, we were talking about liquidity, just kind of what it is and why we would want to use it in the market. So this is liquidity part 2, okay? And this is just going to be how to spot it in the market and where it lies within the market, and then finally, right, I want to take it like one step at a time so you guys can like have time to process and like understand what's going on, and then after all that goes down, then we will be able to get into how we can actually take trades off of it, and then if that doesn't make sense, don't worry, because we will have way more time to discuss strategy and actually executing on trades once we start learning more things. Okay, so today we're going to just talk about where it lies, and then pairing that with, you know, why we want to know where it's at, and also understanding it, and then from there, like, it should become self-explanatory as to how to take the trades, but we'll still discuss that in 2 days. So, right, let's do a quick little overview of what we talked about, why we want to use liquidity. Number one, that's where orders are going to be filled, right? That's where the banks are going to be moving the market. That's where they're going to be able to fill their orders and actually push market in whatever direction they would like to. Okay, and then again, how do they get these orders to be filled? They have to have people exiting the market, and then they also have to have people going in the opposite direction of them, right? Just like we said 2 days ago, it's an exchange. If they need to fill millions of orders, they need millions of orders to be going in the opposite direction. So that leads us into today's video, talking about where liquidity lies. So where are all those people going to be going in the opposite direction of the banks and institutions? Okay, where and who is stupid enough to do this? Where is it happening? When is it happening? All that good stuff. Okay, so let's just talk about
I gotta write this
basics.
down.
Remember, when we talk about trends, how do trends move? Higher highs, higher lows, lower highs, lower lows. So it's safe to assume that traders, like retail traders, will see, oh, higher high, higher low, higher high, higher low. They see that it's trending, right? And they know that the trend is continuing when the high gets pushed above, right? Confirming that there's going to be a higher high, right? So what most retail traders do, what most retail traders will do is they see, oh, higher high, higher low. Oh, they see that the high gets pushed above. They either have buy stops, which is literally just pending orders right above the high. So, right, the price point would be like right above here. And when that gets hit, boom, order gets executed, they get filled, okay? And they're assuming that price is going to continue in that trend, okay? Now, on the contrary, there's also stop loss orders right above these highs as well, right? Because there's people that are trying to short this down move, which isn't necessarily smart, right? You want to trade with the trend, which is what the people that are buying up here are trying to do. But there's also people who are shorting within here, right? And if we know, right, same thought process, right? When people are shorting, they know that their idea will be invalidated if price pushes above this high, right? So they would be exiting the market if this price point gets hit. Okay, hopefully you're starting to understand and see what I'm trying to get at with this, is that when this high gets hit, when this high gets pushed above, people are getting out of the market and people are getting into the market, which is essentially creating liquidity for the potential for these banks and institutions to fill their orders to change market direction. And you're probably saying, well, TJR, if price pushes above a high and people get stopped out, and then also people are buying, that means nobody won. Exactly. They literally liquidated all of those people, and they aren't right, because right when it pushes above, people buy, right? People are buying, and then boom, gets taken out. Their stop loss is right under here, right? The people that got stopped out, they get stopped out by a couple pips, and then boom, market moves in their favor. That's why trading is so difficult, because lots of people are trading like these retail or like just these basic ways to trade, and some people are successful with it, but I genuinely think that they're successful because of their experience in the market rather than the way that they're actually trading, and that's why I really like playing off of liquidity and understanding that. So, right, we know that there are going to be stop losses above highs. We also know that there's going to be buy stops above highs. So that means, boom, when these highs get taken out in an uptrend, right, there's going to be people going long, there's also going to be stop losses above there, right? So when that happens, right, that gives the banks and hedge and these institutions the opportunity to fill their orders and then send market in whatever direction they want, which is usually to the downside. Now let's talk about it in the other direction, right, in a downtrend. It's the same thing, just vice versa, okay? When lows get taken out in a downtrend, people are going to have sell stops, right? They're going to have sell limits, sell stops down here, right? Because they know when a low gets taken out, odds are the trend will continue, okay? So, right, and we talked about during our trend session, or our trend video, trends don't last forever, right? So that's why when we use liquidity, we're able to catch the top of a downtrend or the bottom of an uptrend that are successful because of their experience in the market rather than the way that they're actually trading. And that's why I really like playing off of liquidity and understanding that. So, right, we know that there are going to be stop losses above highs. We also know that there's going to be buy stops above highs. So that means, boom, when these highs get taken out in an uptrend, right, there's going to be people going long, there's also going to be stop losses above there, right? So when that happens, right, that gives the banks and hedge and these institutions the opportunity to fill their orders and then send market in whatever direction they want, which is usually to the downside. Now let's talk about it in the other direction, right, in a downtrend. It's the same thing, just vice versa, okay? When lows get taken out in a downtrend, people are going to have sell stops, right? They're going to have sell limits, sell stops down here, right? Because they know when a low gets taken out, odds are the trend will continue, okay? So, right, and we talked about during our trend session, or our trend video, trends don't last forever, right? So that's why when we use liquidity, we're able to catch the top of a downtrend or the bottom of an uptrend, because we are literally getting into the market. I got my friends talking outside, so I gotta mute them out. But we are literally getting into the market at the beginning of a trend, and that's why we're able to catch these big moves, okay? So when we see that happening, okay, we take note of it, okay? So we know that underneath lows, there's going to be sell stops, and then again, on the contrary, the people that are trying to catch a buy on this like mini little move up, their stop loss is going to be underneath the low. So right, when that low gets taken out, okay, in a downtrend, people are getting liquidated, people are also going short, taking sell positions here, and then that gives market the opportunity to fill orders within here, order block, we'll talk about that later, right? right? This whole thing would be essentially an order block. I don't want to get you guys confused, but right, this move down here is what causes the liquidity continue. Okay, so right, and we talked about during our trend session or our trend video, trends don't last forever, right? So that's why when we use liquidity, we're able to catch the top of a downtrend or the bottom of an uptrend because we are literally getting into the market. Hold up. I got my friends talking outside, so I gotta mute them out. But we are literally getting into the market at the beginning of a trend, and that's why we're able to catch these big moves, okay?
Okay.
So when we see that happening, okay, we take note of it, okay? So we know that underneath lows, there's going to be sell-offs, and then again, on the contrary, the people that are trying to catch a buy on this like mini little move up, their stop loss is going to be underneath the low. So right, when that low gets taken out, okay, in a downtrend, people are getting liquidated. People are also going short, taking sell positions here, and then that gives market the opportunity to fill orders within here. Order block, we'll talk about that later, right? Right, this whole thing would be essentially an order block. Orders getting liquid, will move up. Their stop, there's going to be sell stops, and then again, on the contrary, the people that are trying to catch a buy on this like mini little move up, their stop loss is going to be underneath the low. So right, when that low gets taken out, okay, in a downtrend, people are getting liquidated. People are also going short, taking sell positions here, and then that gives market the opportunity to fill orders within here. Order block, we'll talk about that later, right? Right, this whole thing would be essentially an order block. I don't want to get you guys confused, but right, this move down here is what causes the liquidation and then allows market to fill those orders. Okay, so let's go into the chart and actually show examples of this now, and it's very, very easy. Literally jumps off the page. Look. Okay, uptrend. What's this? High. Boom. Sweep. Downtrend. Okay, we're not going to get too analytical with it, and guys, this happens on every single time frame. Okay, right? Uptrend. Sweep of the highs. Collapse. Okay, this happens on every single time frame. Every single time frame. Ready? Let's go to the daily. Let's go on the S&P. There's great examples of this on the S&P 500. What's this right here? This is on the daily time frame, guys. We have highs right here. Boom. Push up. Takes out liquidity. Big sell-off. What's this right here? We have highs right here. Boom. Market pushes up.
Yeah, the
big
same thing as like the ceiling.
So easy, man. It's very, very easy, and it's like you're going to be able to see this on every single time frame. And so that's also what your homework's going to be. Is literally just finding these situations where a high or low, a high or a low in whatever trend it's in gets taken out, and then price rallies. Look, okay, ready? Want to see something crazy? Look at this. Low, low. You're probably saying, no, it's just going down. Wait a second. Go to the monthly. Sweep. Liquidity got taken out. If we go to the yearly time frame, that is a massive liquidity sweep, right? What's market probably going to do? Probably going to reverse. And that also coincides with the US dollar being extremely weak right now. It's actually amazing how these markets move and how these markets work, ready? And again, I don't want to get too deep into strategy, but this doesn't only happen on these high time frames. It happens on literally every single time frame ever. Okay, so if we go on to like find where market opens, or let's actually do it on like GU. Let's find let's find like boom.
Yeah, but right there,
okay. This is Asian session. Okay, I don't want to get too deep into this because this is again, we just want to talk about liquidity and be able to spot it within the market. But as we can see, right, we have a mini downtrend. Right, we break structure to the downside, take out these lows, rally, we break structure back to the upside, price pushes higher. Okay, like we can find this type of shit on the 15-minute as well. Okay, and when you guys get good at it, when you guys get good at like spotting this, it should be like super easy to see and understand where this happens. Right, it should just jump off the page. Boom, sweep, fall. Boom, sweep, fall. Let's try and find something to the upside. And the reason why I love this is literally, boom, sweep, rally. It's dude, like when you guys start to see this stuff, like it literally jumps off the page. Sweep, rally, and then what does it do to the upside? Sweep, fall. It's how the market moves, you guys. The market is unable to actually move in the direction that it wants to without taking out liquidity to fill the orders. Okay, this is why I love the way that I trade, because it literally makes sense. You are not playing off of a floor getting bounced off of, or it's touching the ceiling, so it's going to go down. No, we're actually understanding why the market is moving and when it wants to move in whatever direction.
Yeah, actually makes sense.
Like, this is literally going to be your homework. I don't really have much else to say on this video besides open up your chart and literally just go on. Okay, yeah, sure. We can literally just call it right here. Open up your chart. This is going to be your homework. Okay, open up your chart. Go on 3 different time frames and find 5 different liquidity sweeps on 3 different time frames. Okay, that's all you need to do. Okay, do it on whatever time frames you want. Daily, 4 hour, 1 hour, 1 minute, 5 minute, 15 minute, because you will see these happen time in and time out, bro. Like, look. Sweep, push. It's not accidental, and it's funny because like you could say like, oh, like you're just cherry picking. Like it's all over, bro. Trust me. If you guys do your homework, you will see that this shit is everywhere. Like it's very apparent, and it's super easy to see. You can even put it on the weekly, bro. Fall. What happened right here? What happened right here on the monthly time frame? Oh, there's a monthly low. Sweet. What happened? Break structure to the upside on the weekly. Rally. It's not accidental, and it happens on every single fucking time frame. And guess what? Guess where we're at right now? On the monthly time frame, at a big high. This candle is yet to close. Okay, this candle is yet to close. It has 28 more days. My guess? Oh yeah, we got some liquidity, and just having some knowledge about the U.S. market and the U.S. economy in general, I wouldn't be surprised if we do just down into the fucking pits. Okay, so that being said, now we know how to spot liquidity. We understand what it is, and then in 2 days we'll get into how we can like take a trade. Okay, I don't want you guys to be like, I know liquidity, I'm gonna take trades, because it's not just liquidity. You need to know a lot more than just liquidity and breaking structure to be able to form an actual bias and be able to take a actual high probability trade. But this is going to get you guys to the point where you guys can start spotting this on the chart. And there's a reason why we introduced this concept first, because it's the hardest one to grasp, and it's the hardest one to grasp, but it's the most useful one to understand. Okay, so once you can understand liquidity in the market, it's wraps, bro. It is literally wraps. It is wraps. Okay, so with that being said, your homework: choose three different time frames. Find 5 examples on 3 different time frames. Okay, choose whatever pair you want. Right, it can be gold, GJ, GU, S&P. Doesn't matter. You will find liquidity sweeps no matter what. No matter what, I guarantee you, without a doubt in my mind. And if you can't, you're doing something wrong, because this isn't even like a come back to me and let me know if you can't. It's like you are literally doing something wrong if you can't spot this, because this is how I make money. This is how thousands of other traders make money. Right? This is how ICT literally came up with this shit. Like. It works, and it is in the market, and it's how the market fucking moves. It's like, it is how the market moves, and I don't care what you say, it's nothing else. This is how orders flow, this is how the shit moves, and you can see it on the chart. So that's your homework, all right? Quick little day today, all right? Get your homework done. If anything, keep going a little bit harder, right? Make sure your motivation is up. We've got a new week ahead of us, more things to learn, more things to strive for, all right? Let's keep it up. And for the people that have stayed with me this far, right? We're already past week 1, so now it's really just the disciplined ones staying in here. I know it's hard to keep up with a video every single day, but hopefully you guys have been able to do it. I appreciate you guys. I got friends out in the pool, and here I am making a YouTube video for you guys, so hopefully you guys can appreciate the time that I'm putting in for you. It really does mean a lot. I've been seeing numbers go up, and I love to see it. I love to see you guys learning, and I love to see you guys posting on like TikTok, adding me on TikTok, adding me on Instagram. Love to see it. It makes me very happy, showing me that I'm making an impact on you guys' lives. So that being said, see you guys tomorrow. Peace out.
Why the fuck is this over? Why can't I use my animal?
Yo, what's good, guys? Welcome to boot camp day, I think 11.
Okay, we'll do this tomorrow. Let's go do some about something else on liquidity as well. I need to fix this chart, bro. I swear. Why is this like not working? You're lying. I still haven't figured out how to fix this. That's the problem. Let's see. Is it here? I remember somebody telling me, but I can't remember from my life. Exchange. I'll be in UTC. I don't have session break gaps, bro. What the fuck? I gotta go ask AI how to remove session. How do I remove session break gaps on my TradingView chart? There's like random white like blurs of nothing every time, every like day or every like session.
Yeah, I know what you mean. Those gaps happen when there's a break between sessions, usually like overnight or weekends. In TradingView, you can fix this by turning off session breaks. You go into your chart settings under the scales or time axis, and there's an option to hide or remove session breaks. Once you do that, the chart will stay fluid, and you won't see those white gaps anymore.
I can't find that. Where is it? What would you say?
Gotcha. No problem. So in TradingView, go to the top of the chart where you see the chart settings icon. It's a little gear symbol. Once you're in, look for the scales tab. There you'll find a toggle for show interval breaks or session breaks. Just turn that off and the gap should disappear. If you still don't see it, let me know what time frame or chart type you're using and we can narrow it down.
There's no thing such as session breaks, at least not on the scales and lines thing.
I see. No worries. Let's try this a bit differently. Instead of scales, head to the time axis section of the settings. It's usually under the chart settings as well, often in a tab or advanced options area. There you can disable breaks between sessions or a similarly named option. Once you do that, your chart should flow continuously without those gaps. If it still doesn't pop up, let me know what device or browser you're on, and we'll figure it out.
I'm on Google Chrome and I'm just on TradingView.com looking at NASDAQ, but I can't seem to find it. In scales, there's price scale, price labels and lines, time scale, but it only has day of the week labels, that data format, and time hours format.
I see what's happening. In that case, let's go to the session break setting in a different place. Go to your chart, click on the settings gear icon at the top, and then go to symbol instead of scales. In there's a show interval breaks toggle. If that's off, your chart will stay continuous and those gaps should go away. Let me know if that works for you.
I don't see anything that says in the symbol thing. It has candles and data modification and nothing else.
Okay, thanks for the clarification. Let's try a different route. Instead of the chart settings, look on the main toolbar. There's usually a clock or a time-based icon near the top, often next to the time frame selector. Click that and you should see options like hide session breaks or show gaps. If that still doesn't work, we might need to check your chart template or try a different time, like intraday views, since that sometimes affects it.
I'm losing my mind, bro. What the fuck?
No worries at all. Yeah, these settings can be a bit hidden. If it's still being tricky, let me know exactly which time frame or chart type you're on, and I can help pinpoint it more precisely. We'll get it sorted.
What the fuck? I can't find it. The only thing I can find is something to enable session breaks, and it just gives me like a line.
I get you now. Yeah, it sounds like the option might just be toggling the breaks on, and there's no separate off switch. What we can do is go to the top toolbar where you choose your time frame, like daily or hourly, and sometimes switching to an intraday time frame, like 1 hour, helps because it smooths out those gaps. If that doesn't work, I can walk you through
it's even worse that way.
Got it. Sorry about that. All right, one last thing to try. Instead of messing with time frames, go to chart settings time axis and check if there's a show gaps or fix gaps option. Sometimes it's labeled differently. If you still can't find it, another trick is to switch to a continuous intraday chart, like a 1 minute or 5 minute. Then the breaks might not appear as stark. If all those fails, we can try a different chart type or template. Just hit.
I'm gonna lose my mind, bro. I swear.
I totally get it. This is super frustrating. I really appreciate your patience. If you want, we can do a quick workaround. We can try using a different chart style, like the bar chart or line chart, just to see if it behaves differently. Or if you'd rather, I can walk you through a step-by-step screen share if you'd like to do that on your end. Whatever you prefer, I'm here to help.
Somebody told me how to fix this a while ago. I can't remember how or what they did. I fucking swear that there was something that they did. It was literally one click. I can't remember what though.
Yeah, I totally get that feeling. I think it might have been a simple switch onto the chart's properties. Sometimes there's a checkbox called Use Session Breaks or Auto Adjust Time Axis. If you flip that one way or the other, it usually fixes it. If you give that a try and it's still off, I can keep digging.
Let me look at something. Trade. Amazing view time. Shut up, ChatGPT.
Exactly.
Can I download a fucking template anyway? Okay, so okay, well, whatever. I just can't fucking find that. I need to do that on my own. Fucking sweating, bro. It's so annoying. Let's look at this one last time. Background, no. Grid lines, no. Watermark, heading. Scales, I'll make the text a little bit bigger. Margins, okay, I don't care about that. Trading, buy and sell buttons, okay, show only now. Appearance, positions and orders, okay. Profit and loss values, positions, brackets, money, okay. Stabilen. Okay, I just don't fucking know. Whatever. Anyways, So let's see. I gotta first. I'll do the like 1 hour time frame, and let's look for these. I mean, yeah, but that's a little bit of a farce. That's like a month and like half a year between those two. Let's okay. Anyways. Okay, so. Oh, where are my? I need this. Okay, so. And then we hit, and then we round it down. Oh, okay. Oh my god, this chart is so fucking choppy. I can't see anything. This died hard then. I missed this. One sec, let me go get a glass of water. Is it because of it's Nasdaq? Let's go to like S&P 500. SPX. It's the same here. Okay, but like on this chart right here, there aren't any gaps. What the fuck? There are, but they're like very small. Is this chart even like correct? There's still gaps, but they aren't that bad. Never mind, they are bad. I'm gonna be trading NASDAQ though, so what is that, NQ? NQ is minis. Oh, what is this? Okay, yeah, these don't have, I'm not sure why it's blue, but it's very... Why the fuck is it has them too? I'm gonna lose my mind! Okay, but yeah, like actually, like let's look at this. So for example, yeah, it really did that right here, like and then rally down, like that's how that actually did happen. Or like here, but that's like months apart. I can't really be looking at that. Yeah, I mean, I guess it really did the same thing even on the 15-minute. This was probably something else. And then we broke, and then that, but this doesn't really. I'll be trading E-minis, so I guess I'll just be trading this. I mean, I kind of understand, but it's not really as often as he said it should be. I mean, I'm not seeing. Yeah, let's see. I mean, I guess, but not really. This is the fail. Let's look at the 15-minute chart. I mean, I guess we did hit and then we went up, but not that bad, not that much. I mean, yeah, I guess we kind of did right there. Molim. Ne znam, snimam, doći ću kasnije. Snimam, kažem, vidjet ću posle. Zatvori mi vrata, molim te. Zatvori mi vrata kako još prolazila.
I made $1,800 trading the first week of January 2026, and in this video, I'm going to show you exactly how I did it. So we're just going to start on the charts, and we're going to break it down. You're going to get my exact confluences, my idea while the trade is forming, and why I took it. So first setup we have on January 5th, 2026, came back on the 5th of January. Now, initially, what are we looking at here? We're looking at gold 5-minute chart. This is obviously a bullish market. So as we know that it's a bullish market, we're going to be looking for buys, of course. So immediately when I come to the chart at 6 a.m., which is 8 a.m. Eastern Standard Time, we immediately have some liquidity built up below here, below here, below here. And I like the sweep of this low. We definitely swept all these lows, but there are definitely key areas that have the most important liquidity. And sure, I would love it to sweep all these lows to continue upwards. The main important thing is it swept a low to continue upwards.
Gold futures, I don't know about that. Okay, what the fuck? Yeah, okay.
Classic gold attribute. Now that we understand we're in a bullish market and we swept the low, we're going to let the charts kind of do their thing, let the candles print. Okay, now we're looking at market structure here. We have a high here, we have a high here, highs here. So I'm looking for a break of structure. The main thing that I want to trade is market structure. Market structure is one of the most easiest ways to trade, 100%. If you just follow the market structure and find a way that you can trade the consistent patterns it's so easy. You don't have to really complicate trading much. Like ICT, it's very popular, and
Yeah,
some of the new traders are going to ICT 1 minute Nasdaq. Personally, I think that's kind of crazy. It's kind of deception by mainstream media, and it's cool if you make money off of it. But you know, if it's hard for you, then I wouldn't hesitate to try something else because ICT is very complicated, and for someone naive to go to the 1 minute on Nasdaq, oh man, especially with how much you have to consider with the ICT strategy, it's something to consider because that strategy is something. But we have liquidity sweep. We're looking for buys. We're already breaking previous highs, following market structure. What do we have? We have our highest high up here. We made a lower low. Maybe bearish. Nah, it's not. This is a classic gold attribute. So we broke this high here. So now I'm looking for some sort of confluence for me to continue this upward. And we actually do have a demand zone here, but my demand zone did not get tapped. So looking at this, what else do we see here? This is actually right before or right when I got in the trade. So if we switch to the 50 minute, these are the time frames I use. 1 minute, sometimes not so much. 1 minute is a lot of noise. Got to be careful there. I like one trade a day, high quality setup. I'm good to go. That's all I need. I don't want to sit there on the 1 minute, you know, get cooked 2-3 times before I have to take my trade that's gonna make it all up. Like it can be discouraging, 100%. I like the high win rate, 1-to-1 RR, hold some runners. Like yesterday, February 9th, I caught a 1 to 2.5 RR. So that covers 2.5 losses. This is why the risk to reward is very important. Now, looking at the 15 minute here, we have clear support. Support here, support, rejection, resistance, support. Again, it's tapping the support. It's so clear, especially on gold. So I'm waiting for it to tap my zone. It needs to come down like this and then continue upwards, continue to make a new higher high. It doesn't tap my zone, okay? I have support here as well. So since it never tapped my zone, I'm not considering the demand zone anymore. I mean, you can consider a fair value gap. Personally, for me, it's not my cup of tea. Do what works for you, but I think, you know, controversial, but ICT is kind of just, it's interesting strategy. I don't think trading has to be that hard. So exactly like this, we're rejecting support, double rejection. We're rejecting the EMAs. We have 2 EMAs right next to each other, rejecting both of them. My aggressive EMA is starting to curl up and trail price.
What the fuck is a BMA, bro?
I mean, it's just adding up. We have a sweep of liquidity. We've broke some highs. We're literally loading up for buys. So this is literally where I got in. Next candle, boom, like that. So I'm in a little bit of profit right now. I'm going for my 1-to-1, which is right before the highs, which is not bad. And right here, my stop loss is going to be at the support. It's not supposed to come down past these wicks. We have 3 wicks here. This looks beautiful, rejecting perfectly off support. Go to the 15 minute, even better. There's even a 15 minute demand here, somewhat. It's not that clean. I wouldn't consider it. 5 minute, beautiful trade, 100%. So fast forward this a little bit, and I mean, you see the volume. It's literally there. So this trade, I'll put it up on the screen. I don't know how much I made, but you'll see everything from my entries to profit, whatever.
You know, I'm not blind. He didn't put anything on the screen.
I mean, this trade is so easy. You can get out at these highs. As you can see, it kind of swept the highs, hesitated a little bit, and I believe this ran. Yeah.
Damn, it took him 15 minutes. That's great. Profit and loss $500. Damn. Nice.
So, perfect trade. Perfect example of what? This is another 1 to 2.5 RR. Now, if you want to see educational content like this, I'm dropping a paid Discord. Now, it might be controversial too for my channel because I wanted everything to be free, genuine. You know, I want to provide for people that are learning. You know,
Man, you have
just for free.
400 subscribers, bro. Are you serious?
What am I supposed to do, bro? I'm going full time. I'm already full time, and I'm really not going to just give away the sauce for free. That's crazy, I think, especially being full time. So yeah, there's a paid Discord. I'm going to be dropping webinars in there, going over every setup I took. Going to do live trading every morning, sharing my screen, showing the live executions. I actually put up a calendar right now of my P&L for the year so far. And yeah, that'll give you an idea of the consistency. My intuition and discretion is on point this year. I'm definitely coming for those high
bucks? Are we
figure months.
serious?
So
To be honest, yeah, it might
I
be
really
a
know
good.
how to scale the prop firms. Like everything's gonna be in the Discord mainly. I'll be dropping some YouTube videos, so make sure you like.
I'm gonna be back in a sec. I gotta go to the toilet.
Vabbè, io mi 100 minuti della versione gigante. Male? Mama, ci so.
My bad. Damn, I gotta upload this later.
Like and subscribe. Trying to get monetized on here because I definitely giving out some decent free game. I actually took some videos down because I gave out too much free sauce. So those will definitely be in the Discord. It's going to be a ton of stuff in the Discord. I'm thinking about dropping a full beginner's course in the Discord. Everything's going to be exclusive to the Discord. That is going to be in-depth information for how I have been able to scale myself and go full-time with this. So it's going to be webinars, homework, live trading sessions, backtesting sessions, anything trading related to my strategy, psychology, scaling, managing, consistency is in the Discord. There's going to be a private Discord link in my bio. It's just for traders to come together, learn and improve our skill set because we want to go full time with this 100%, pushing buttons in the morning, using critical thinking, making hundreds of dollars, thousands of dollars in the morning. Why would you take something else? I think trading is one of the best skill sets you can have. Long term, short term, any term, not much can compare to trading unless it's a business, and that business has to be very high return in a short span or a long span. A sustainable business. Trading sustainable. So simple. I'm so biased to trading. But yeah, link in bio. So on to the next setup. Now what do we see here? London, kind of ranging. Interesting range here. And we break down a little bit. But what do we see? We have bullish market structure, pretty damn clear. So at the start of New York, interesting day for sure. Yeah, these are literally back to back. I could have just, crazy. So, interesting day already. Start of New York. Now, what am I doing here? I'm just waiting. I'm 100% just waiting because I'm trying to trade a trending market. I need a trending market.
And this is consolidated.
100%. Those are the days that you will catch the runners that will cover losses. So I will trade ranging markets, but very rarely. And now here, I'm waiting for these to be broken. So now we have a major break of structure here. We broke these highs right here. Key indication we're ready to go bullish. And now another little free sauce that I'm
Still
gonna
5
drop
minutes.
is rare. It's gonna be rare on this channel, so take note of this. Fresh breaker structure, major breaker structure. There is liquidity sitting under here with a demand zone right here. So this demand zone may not hold if you can. There's a tiny gap, tiny gap right here between these demand zones, making this one valid and this one valid. And they're different demand zones. We go to the 15-minute. I believe this may be. Oh, okay. So there's even a 15-minute up here that gets invalidated. Now, very key thing here. Right below this wick, there is liquidity, and this happens time and time again. I've seen this over and over, where it's going to break the first zone to go to the second one and then take off, because it needs to swoop a little bit of liquidity based on that first low at the second zone and take off. Free game. Major breaker structure, higher high, higher low, sweep this low, tap a zone, and take off. So another characteristic with gold is the first initial push can be nice, while the second one's going to be slow. And I believe this exact setup is a perfect example of that. But we already know we're in a bullish market. We're trying to take some buys here, trying to follow the trend, going with the trend. And now you can see, just like that, this demand zone invalidated immediately. That 50-minute demand zone right here, invalidated. We swept the low, tapped the demand zone. Now I'm looking for buys somewhere in here. Now, market structure, this is our lowest low, and this is our highest high. So once we start to get that push upwards, my stop loss is going to be at the low of whatever candle wick starts to go up, because following market structure, we cannot break this low, and we're looking to break this high. So once we have our immediate push up, somewhere within the demand zone, my stop loss is going below that low, below that wick, that candle, because once we start to take off, we should continue upwards. We're not looking to go down at all. We might go down in range a little bit, but we cannot break this low here. This low cannot be broken because we're in a bullish market. If we lose on this setup and it breaks this low, it breaks this demand zone, wrong. There maybe was some key factors here, higher time frame, or we just got faked out on the setup. But key thing is here is higher low, higher high, higher low, higher high. Just following market structure. So this setup already tapped my demand zone. We're looking for buys, looking to break this line and stay above somewhere within the next candle. Let's see if we get it. There you go. That's my entry right there. So stop loss at the low of this candle. So now we cannot break this line. That's where my stop loss is going to be. This is supposed to be our higher low here. Even though it's a wick and you won't see it on the line chart, a wick rejection off the zone, even better. Immediate key indication that that zone is a strong area. So now I'm already in the trade. Immediate profit. Came back to break even. Little doji candle. It's fine. We're pretty deep in profit. Red candle. See, this is what I'm saying. Is those slow days. So there you go. 1-to-1 hit. Easy enough. This trade is so easy. And I believe this slowly climbs up. Yeah, this slowly climbs up to make a higher high. Because it's following market structure.
Okay, I'm gonna be watching this on my own, and I'll be editing this video because, yeah. I'll see you guys tomorrow, and tomorrow we'll be doing how to take loss, liquidity part 3, and then we're getting into the new stuff. I watched it before, but I low-key forgot. So, if you guys have an amazing day, night, whatever, week, month, year, whatever the fuck you want. Yeah. And I will see you guys tomorrow. Bye-bye.